everybody. It is another Swing Wednesday. If you can see my screen, hear my voice, you know the drill. Yes, good days. Thank you, Tim. Appreciate that. Richie, Jason Bell, Farzan, how are you doing? Hello there, Stephen. Everybody trickling in here. Greg, my man, how are you doing? How am I doing? I'm a bit under the weather right now. I just had some dental work done yesterday, and I'm not quite feeling up to snuff tonight, so I'm not going to be my typical boisterous, bouncing off the wall kind of self, so I do apologize for that. And occasionally I still bite my tongue, so I might have to mute myself while I swear. Okay, so let's just get this show on the road. You all know the drill in the beginning, okay? Just so you know, in case you don't, in case you're new, that we do have some new people here. So, nothing presented in this webinar or video presentation, whether vocally or visually, is to be taken as trading advice. All the content of this presentation is strictly for educational purposes only, and it is your job to take this, go and do the homework, and make all your trading decisions on your own. Okay. All right, so let's get started. Let me maximize this here. I have to minimize this little tab over here and move the questions over. Okay. Whoops. Where did it go? There we are. Okay, so swing trading, episode 5. We're going to be covering the larger structure. Okay? Basically, how to handle those big M's and W's and knowing that they're headed back to a certain direction. All right, so what is the larger structure ultimately? Whoops. See, I'm already losing it. It's a bigger, wider peak occurring on your higher time frames, okay? They're the larger M or W formations over the course of a week, several weeks, or even 2 to 6 months, all right? Now remember, this is swing trading, all right? Now the larger structure, I'm going to be using LS for most of the presentation, still looks exactly like the market maker cycle, you know, the 3 up, the 3 down. They're just larger. Now some are actually smaller, and they're kind of intermittent. You get people all confused because it's just like, is this level 1? What is it doing? And then it just, you know, drops, or typically your resets. Now, of course, they can be a head and shoulders. They occur in both range-bound and trend, and they act as reversals as well as your resets. All right? Now, the importance of the LS is like, what are they doing? Of course, it's inducement. You know, you get, it's reversing, or, it's going back down, up, especially coming off the middle of the structure. By that time, everybody's in the wrong direction because they think it's an imminent trend reversal. All right. Your larger consolidation areas also act as larger, wider accumulation of contracts with inducement of both ways. Think about everything I talked about with the range bound and the trend, the psychology of it, the validation of the technicals, all that stuff. They're inducing both ways. Okay. They tend to be much more clearly visible if you take the time to study them, because the smaller ones can be very confusing. That's what tends to confuse most people. I mean, there's a couple this week where it's like, oh, we're in level 1. Nope. It's just a small. Yeah, that's a bit of an oxymoron that you're going to have to deal with here. There are the smaller, larger structures, and they crop up. They look like level 1, potentially going into level 2, and then it just continues back down. We'll be taking a look at it. Now, one of the additional importances of the larger structure is there's almost always a second leg. Whether it comes a week from now, 2 weeks from now, or 2 months from now, there's almost always a second leg. All right, so that lends itself to more confidence and certainty. Why? Because it gives you that more clearly defined end game. Because if you have a first leg, all right, it busts up, it gives you 3 bursts. whether it's 3 times ADR, 2 times, 1 times ADR, whether it's a small, medium, or larger structure, okay, first leg is at a certain price point, and you're expecting the second leg based on the behavior, all right? There you go. It gives you the confidence based on what happens at the middle of the structure, okay, to take it back down towards the first leg. And that's what we're going to be looking at today. Because my favorite thing in the whole wide world is the middle of larger structures, all right? So let's just cover the anatomy, because we have a decent amount of new people here. And one of the things I see consistently is people blazing through the main course and then busting out all the boot camps and then going, okay, yeah, this weekend I'm going to get started on all the DMR stuff. And it's, whoa, take it easy, all right? The larger structure, whether it be a week-wide structure, which is your typical market maker cycle, or a 2 or 3 week structure, it's important to be able to see that, all right? Now, the anatomy is very simple, all right? Your structure segments, first leg. You'll see on my markups, my charts that I'll send out and whatnot, 1L. You'll see that marked up. That means first leg. L1 means level 1. That should be pretty clear. The middle of structure, all right, and the second leg. That's pretty much it. Now, there's more nuances to it. We're going to look at that in a second, but that's primarily it. Now, one thing on the middle of the structure, all right, the middle of the structure, when you start studying these, and that's going to be part of the homework, you're going to find that the mid structure will be some other form of structure, either the mirror image of the parent structure or a head and shoulders. Now, what does that mean? Simply put, all right, a larger structure M will have a W present as its middle, okay? A larger structure W will have an M present as its middle. And, of course, you get the head and shoulders. The head and shoulders are not uncommon. In fact, some of those, they can be my favorite ones because the head that produces a very visual, bam, gotcha kind of thing. You know, think about a larger structure, right? You have your first leg and it comes down in 3 bursts. You get your 3 levels, or it's not quite 3 levels in terms of ADR and all the rules of the 13 cross the 50, 50 crosses 200, and then 50 crosses the 800 or 200 crosses the 800, and you have angle and separation. A lot of times you don't get that with some of the larger structures. But when you see a head and shoulders and you get that burst and then that pullback, especially with a star pattern on the H1, H4, those are beautiful things, all right? So just stepping through it, let's take an M, all right? You get your first leg, that gets put in. Now, we're talking either 4-hour or 1 hour, all right? Your first leg gets put in, and it's almost always a smaller structure on the lower time frame. If you get a 4-hour larger structure, if you look at the first leg, and you're going to do this when you go into your charts, just find these larger structures, once I show you, and identify the first leg and dial down to the H1. You're going to see like some sort of M on that first leg that isn't really too visible on the 4-hour. Or if it's a larger structure on the H1, you dial down to M15, that first leg is going to be some sort of structure, whether an M or head and shoulders there, all right? So you get that first leg, you get 2 more pushes down. Then you get the middle of the structure. That's when that starts to begin. That doesn't work out. That's when it begins, okay? Here's the intermission of the larger structure. This is where you get the mirror image of the impending larger structure, and that presents as the middle. So in this M formation, you get those bursts down, and coming off the first leg, you start to get some chop, and they will produce most likely either a W or a head and shoulders, all right? And even in certain situations, the middle of the structure can last 3 or 4 days, and that will have a mirror as its middle structure. And believe me, I know this sounds a little confusing right now because it's all words, but we have different learners. Some people like the instructions, the step-by-step breakdown, but I do have images coming up. All right? So then you get the second leg of the middle structure, and that traps. This is what I like to look for. Why? Going back to what I said, it gives you more kind of more certainty, right? Because you know from doing the larger time frame, the higher time frame homework, well, hopefully, the more you do. I learned that typically a single leg that's a single peak that's 2 days wide typically doesn't just keep producing. That's why I like those larger structures. Once I see that first leg, I look for the middle, boom, take it back up like a week later, 2 weeks later, whatever it is. All right, so when that second leg of the middle of the structure starts with a trap, that's when I start to look to go back towards the first leg. So the second half of the structure begins. You get 2 or more pushes back up towards the first leg in order to create the second leg of the larger structure. Sorry, I had to cough there. And you'll find usually that the movement stops along the way at the trapped volume and previous consolidation areas of the first half of the structure. What? We're getting to it. Okay, so here's our visual guide. Get your print screen at the ready. I'm going to take a little drink here. All right, to start off, especially for the beginners, here are your 2 basic forms of your peak. Okay, I really didn't throw in the head and shoulders here with the neckline. Most people kind of know that, but we always call stuff the nadir and the apex in here, and it gets people very confused. I myself, I know what they are, but I still call everything the middle, okay? It just keeps everything simple. But if you're confused on which is which, here's a quick screenshot that you can take in order to, remind yourself. These are, little mental tricks to remember, oh, that's right, the apex is on the W. Okay. So let's take a larger structure M. Now, this is, let's say, 2.5 weeks wide, maybe 3 weeks wide, all right? Now, what do we get, first of all? We have our first leg and our second leg structure. Those are the structure segments, all right? First leg, second leg. This on my charts. We have the middle of the structure. Mid-structure, you'll see MS on my charts all the time. Of course, I'm throwing out the abbreviations because when I send you flashcards and homework to, or the homework legend to check against yours, you're going to need to know what they are. Now, most likely and more typically, this is what you'll see. You'll see a intraday larger structure on the first leg. Okay, maybe it's 2 to 3 days wide. I typically like to see them 2 to 3 days wide. It could be a single day. All right. Starting in the Asia, and then the second leg comes up in New York. Think about all that trapped volume coming into New York. London's still active. New York's getting on board. Cool. Continuation, right? Nope. It drops down. Boom. And we start to get our middle. Okay, but this is the basic outline. There's your intraday larger structure. First leg, larger structure. We get the middle will typically be that W. Now, do you see what I mean? Okay, we have an M forming, larger structure. What does the middle become? W. A lot of times you get that W. On my chart, a couple times you'll see MSM, which just means mid-structure mirror. I know, it gets confusing. Don't worry about it. You understand the concept. You don't need to use any of these abbreviations or anything. Now, in more detail, this is typically what you'll see. Doesn't this look awfully familiar? Okay. What I find too many times, though, is that there's a lot of confusion because people just they get wrapped up in, right, exactly. I see that all the time. Exactly. And this is what Steve has been trying to drill into everyone from the beginning. Now, if you just slice this in half, you get, right, it looks just like 1 hour structure. You'll see these on the 4 hour, you'll see these on the 1 hour. All right, so, and this is, this is the market maker cycle. This is precisely what Jim has cut in half, and he shows like the 1/2, and, he refers to it as the benchmark. It is, it's the benchmark for everything. It's the market maker cycle. It's how they work. Okay, so you'll start to see this. Now, when you start to see this, just this half, get excited, okay, especially if this second leg goes below, all right? Because, again, they need to induce, they need to trap, they need to get people excited that it's going back up. They need to trap the larger money that's out there, the institutional traders. And, of course, get all the retail traders they can on the way, all right? So this is yet still a bit of a basic form. Now we have our second leg larger structure. A lot of times that'll be an intraday larger structure as well, maybe over a day, over 2 days. And as you can see, that's like a 1 hour or 4 hour 22 trade. All right. This structure can happen over a couple months. It could happen over, 6 weeks, 4 weeks, 3 weeks, whatever. So ultimately, I know I didn't even need to really draw that. You can see there's our 3 pushes down. There's our 3 pushes up. And you will typically find that they will break this middle of the structure, heading back up, flip the zone, head back up, kind of break this area, come back within that area, flip the zone. Notice they stopped just short of this. They broke this, stopped short of this, back up, extend this a little bit, and then drop back down. Now, why did I stop it here instead of just showing you this big thing? Well, mind blower. Candles have this structure in them at the very lowest levels. Absolutely. Singular candles have this inside each of them. Yes, absolutely. This goes all the way down to the M1, M5, and whatnot. But seeing this on the higher time frame, if you see this on your 4 hour, if you can learn to project from here and start and just know the way they work, and we're going to look at this on the charts and make it very clear, because the difference is it's the choppy, bursty. I always say bursty behavior. I sound like a high school teenage girl. It's very bursty. That's what I call it, especially the resets. The reason I stopped it here is a lot of times if this turns into a reset, okay, a lot of times you'll get a nice move down, but it will stop at the last level of consolidation before this second leg was met. You'll see that a lot. Now, the other place that it'll stop typically is back down towards the middle. Those are their 2 favorite places to stop, all right, before heading back up. And they will create a wall of price, wait for the moving averages to come up into this area, smack into them, that moving average tug. I like that. 4 hour has more power. I like that. Okay, so let's take a look at a more realistic view. Larger structure M. Okay, now I'm going to mute for about a minute. If you want to take a screenshot and mark it up, or if you just want to look at this and see everything that I talked about, intraday larger structure to start off, bursting, the middle mirror structure, the mirror of the middle structure, the 3 bursts, all that, take a look and see if you can see all the different moves that they might use. And by the way, feel free to, type that stuff in, anything that you see. Precisely, Greg. Exactly. Yes, Steve Shelley, same as Greg on it. Patty, that's quite a list. Fantastic. Um, Mike, somebody's saying, Doug, I thought pushes were price movements within levels. Am I wrong here? No, you're not wrong. Um, there's a whole overlap of levels versus pushes, um, and I do apologize if I'm confusing the matter here. When I say pushes, you are right. Within levels, there are intraday pushes. Okay, you'll get the 3 pushes down into consolidation of level 1. Then you get your stop hunt low rise, or if they decide to do a straightaway, you get your next 3 pushes, etc. But because a lot of these larger structures don't adhere strictly to the levels, as far as okay, real quickly. That's going to be on the next slide, Gloria. Real quickly, what are the rules for your levels, right? 1350 cross, level 1, 5200 cross, level 2. What's level 3? 2.5 to 3 times ADR, 50 crosses to 50 crosses the 800. You get the cross of the 800, EMA's fanned out, etc., etc. Okay, these larger structures, in their various forms, don't always adhere to that, and that's what gets people screwed up. All right. Range-bound phases and trend phases this occurs in, and range-bound and resets typically will, you'll just start to get the 200 crossing right around here. And then people expect, 200 crossing, level 3, right? Well, no, just kidding. All right. All right, so let's take a look at the next slide. So everyone pretty much called it, okay? Here we're starting to see this intraday larger structure. It bursts up, okay? We start to get our moves down. Now already, I am taking this short, but I'm not taking it past a certain area, okay? Typically this stuff comes down into the blueberry, into the mayonnaise on the 4-hour, on the 1-hour, depending on what kind of structure is setting up. Because sometimes the structures on the H1 are beautiful, but man, you don't really see it on the H4. But either way, if I see like a 2-day peak over here where there's nothing over to the left, I'm going to be expecting this second leg of the larger structure. And that keeps me confident in going, all right, you know what? I'll take it back down to a certain area, maybe back down to a quarter point, the blueberry, whatever, but then I'm done and I'm going to wait for this because I know it's coming. Okay. Now, most of you pointed out, you got the 3 bursts down, then the middle of the structure starts. This becomes the first leg of your mirror middle structure, right? If your larger structure is an M, right, your middle is going to be a W. So you can start to see the W here, but what happens, you even get 1, 2, 3 up into the middle of the middle, all right? So you get a mirror structure middle of the larger structure mirror structure middle. I know it's a lot of structure mirror. Don't worry about that. I'm just, again, using the stuff that I have on my charts that I did a long time ago. I never thought I'd be presenting this stuff, so I didn't think, hey, let me make it easier for everybody. And these smaller structures is also typically what you'll see on my chart as a 3x3 because it's bursty action, burst. It's getting inducement, but it's not really levels, okay? Now, real quickly, you'll see that these middles, all right, they're always trapping near a previous trap area, okay? I didn't just draw this randomly. I didn't draw these lines randomly. Notice where this stops, right here, okay? There's trap volume here for some reason. Maybe this is where it hit the mayonnaise before it crossed over and hit the blueberry. People thought after enduring all this uptrend that it just came out of, that it's going back up. They thought it was going back up here. They thought it was going back up here. Remember what I talked about, the skeptics and the true believers, okay? So they're going to start showing back up. Oh, see, I knew it was a pullback, and they won't release this trap volume, and they start heading back down. Okay? Maybe they stop right around here, act like they're going back up, and then boom, they'll break that first leg. Now people are like, oh, I guess they are going down, and that's when they shift hard away. They'll break here, but they won't take this volume out, and then they'll hold. Come back, flip any zones, and people taking it on the break of the people still holding it long on the break of here, and maybe they saw this new area, this new high, right? Because what do we know about, like, oh, if people starting to take this long, they're going to wait for the new high before they start moving to break even, okay? So it broke here, it starts going up, they start going long, maybe they suffer through this, now it starts going up and holding, okay, well, now we'll move our stops. Bam, hit you. Come up to here, where do they stop? Just short of this. They start jerking around, maybe show an intraday larger structure here, and then finally we get our second leg larger structure and they roll over and they shift, okay? Yeah, exactly. Sounds like you recently, there's a couple pairs that are going through this kind of stuff right now. It's fantabulous. Okay, real quick, I want to know the philosophy as to why the MM stopped short of the level 1 short on first leg when making the run up on level 2 second level. Okay, you're talking about, say, right here, right? Want to know the philosophy why they stopped short of the L1? Okay, saying yes. All right, good. Simply because they want to show. There's people out there drawing all sorts of these lines, these support and resistance lines, okay? So right now there's nothing on the chart on this image, but perhaps this was a quarter point right here, right? Okay, they burst up 50 pips past the quarter point, maybe 75 pips, boom, they come back, they flip the quarter point zone. Maybe that's a nice 125 number, okay? Now they're showing they're coming back up, they're going to reject off of that. Cool. Resistance. I'm going short right there. No, you're not, buddy. Thanks for your money. Okay? So they always want to stop before the last, before an area of trapped volume that's in line with where they're stopping, because they want to work that. They want to get anybody that's maybe still holding long over here or thinking about going short. They want to screw with people. And the way they screw with people, what? Time is human condition. Time is their greatest weapon. They start chopping back and forth, showing small little W's and M's, and people are like, they just can't sit on their hands. Okay? So that's why they will stop right at these areas, just to show, oh, I guess it's going back down. Oh, no, now it's going back down. All that kind of stuff. All right. Like what Brexit first leg large structure did and is still in the process of creating the W's. Yes, that's yeah, Pound was great. Pound was great at that. A couple things have been they've been holding this longer, larger structure that it was very thin up towards the middle. If you'll take a look. Okay, so there is small versus big. Easy to wrap your head around, I'm sure, because we all understand that everything is fractal. So it shouldn't be that too hard of a concept to really grasp onto. Okay, the big. I'm going to have to minimize this a little bit more again. All right, so the big, they're more obvious. All right, you get clearer levels visually. All right, clear levels via the BTMM checklist, which we already covered, and everybody already knows the 13 crossing the 50, 50 200, 200 crossing the 800, or 50 crossing the 800, and the fanning of the EMAs, right? They often are lovely reversals, although they can certainly be resets. You'll get, as I explained in that one, 2 slides ago, you'll get a nice big, like 3-week M formation or W formation, and it starts to create that second leg, but it stalls at the last level of consolidation, all right? TDI actually changes direction and begins showing a solid reversal. All right, a lot of the resets. Remember what I talked about with the resets regarding the technicals. The reason the resets are smaller, larger structures where you don't get 3 clear, good levels is because they're just taking their time to work the technicals, to get the momentum indicators and all that stuff to roll over. All right, but with the big ones, you'll actually get what looks like a rollover. And, like I said, we'll take a look at it. I know some people are probably chomping at the bit. And RSI, a lot of the time, even though stuff starts to roll over, it doesn't quite make it to the other extreme, though. So you get a first leg W, all right, it starts to burst up in 3 bursts. Okay, the market baseline and the RSI, they get over that fixed 50, all right, and it starts to look, oh, it's going to change, but you know what? The RSI just can't quite get over into that overbought, which if you remember, I was talking about when a trend change happens, you're looking for that entire TDI to kind of shift over majorly, the majority of it anyway, to shift over to the other side. And all of a sudden you start hitting overbought over and over. And it just keeps going up, up, up. So there's some things to remember about the big. All right, and the smaller or medium. Okay, these, you can get larger structures on the H1 and the M15, but primarily talking about the H1s, and you'll see them on the H4 too, but they're so tiny. They're just very innocuous. It looks just like the thin consolidation that I talked about in my first or second presentation, okay, which are not to be confused with range bound. These are often the resets. They often present as a third, fourth, fifth, etc. hits to the low and high, and they often present as those trickle down resets. Okay, where you get a beautiful 3 up, 3 down, and you see the W, all right, and then it can't quite get past the 50 or the 13, and then it starts to roll over, and it goes maybe 50 to 100 pips below, and then it starts to make another perfect W, and you're like, oh, maybe this is the second leg that extends past the first flow, but then that one fails too, and they keep creating these smaller, larger structures over over a period of 1 or 2 days, or 2 to 3 days. All right, that just keep failing and failing. So that's what I'm talking about with those trickle-down resets. All right, now we're going to get into the charts after this, but I want to talk about the harmonics. But first, some water. One moment. Okay. Harmonics. Oh, nope, too far. Real quickly, everybody, hopefully, what do we know about harmonics? yeah, commercial breaks. What do we know about harmonics? What other harmonics, what are you, okay, you're sitting at the bar, you're sitting at the dinner table with the family, and you're telling them about the trading. You don't tell them too much because it's proprietary and you signed an agreement. But you're explaining these harmonic things. What do you tell them? What are they? A good blues instrument. Good. Level 3, possible indication of a reversal. They're based on Fibonacci's, right? Areas of potential reversal. Third level tells you the momentum or something extreme. Points of reversal or continuation. Right, drill down to the H1 and then the M15 for entry. Okay, right, need a valid pattern, good. All right, so real quick, they represent potential level 3 or safety trades. Okay, the bat is your near miss, the butterfly, the extended second leg, and the Gartley is your safety region. All right, it's that the second bullet point tends to be what most people really think of them. They paint pretty boxes with wings and stuff. Okay, but they let you know of a potential for a setup to occur. Most of you got this right. Most of you are pretty on it, but I still see a lot of confusion about them. But they give you a range and time to watch that setup. The box. It presents that box for you to watch the setup, or watch for a setup. Okay. But it's also something about the fibs. People talked about that. A couple people mentioned about that, right? And there's a Twitter alert or something. I think, yeah, that's I know this stuff, but I'm talking about other people. I think it's something about fibs, right? Okay, we're trading fibs now? No. And I think there's a Twitter alert, right? Yes. Okay. Now, a misconception is that if you miss it and it's outside the box, you're out of luck and there's no point in keeping it on there anymore, which is just a big nope, all right? We already said they're based on a particular Fibbo calculation which gets triggered. I don't know what it is. There's some people in the group, they know what it is. They know, they have studied, because they want to know, and that's perfectly fine, but I don't even know. I just know it triggers a particular Fibbo calculation. All right, and then the harmonics box fires, and it says, hey, check me out, look over here. All right, now the retail traders love their Fibbos. The market makers use the retail traders' love against them, and the RTs get trapped. Retail traders get trapped. I'm reading it verbatim. I'm wonky, I'm out of it. So the box is an area of potentially highly valuable trap volume, and it's sitting there on the chart calling out to you, okay? It's saying like, hey, there's people that reacted. Look, they rejected out of this area the other day, all right? And so there's obviously some people trapped over here. So why don't you keep watching and see if they don't test this area and possibly reject it, okay? So, simply put, a harmonic's viability is not relegated only to the width of the box, all right? Look for the harmonics that fire on specific segments of the structure. We're going to look at this. First leg, second leg, and the middle of the structure. If price retests that area and rejects again, you can take it. This just happened. This happened a couple times this week, and it's happened a bunch over the past 3 or 4 weeks. But it just happened, I think, on Monday on UJ. There was just this small little Gartley, this small little harmonic, and it pulled away, and then it came up and it tapped it again. And what happened? Middle of a smaller, larger structure, right at the quarter point, second leg harmonic, into the harmonic zone, but it was outside of the box. And what did it do? It headed back down. Okay. The bonus is when you get a particular segment structure. Hold on, sorry. Let me rephrase that. A particular segment structure coincides with a weekly segment. I've been starting to talk about these again in the weekend study group. People tend to kind of reject these or not reject them, but they kind of forget, all right? And those are the false move week beginning, the midweek reversal, and the trap move end of week. So you were saying to keep the harmonics on charts afterwards to see the MMs going after the trapped RTs. Exactly. Okay? Because I said, I think that was in the email that got sent out. One of the questions I answered was something about fired. Like basically, once it's fired, people get rid of them because they think they're expired, but they're not. Okay? Now, it doesn't mean that it's always going to come back into the region. No, it's just that once it rejects out of there, especially if it rejects out of there, just leave it on. Okay? I know a lot of people, they get rid of them because I don't want that on my chart. And I think you're missing a lot of great potential there. And you're going to see in just a moment. But seriously, when you combine a retest of the harmonic range with an additional, like a part of the structure, okay? So you got a harmonic that fires as the middle of the structure, right? Then you get your little mirror structure middle, structure middle mirror, all right? And it comes back into that area like maybe a day later, 2 days later. So now you have a second leg harmonic that's part of the middle of the, and then you look at it and you go, oh boy, that's actually the false move week beginning. It's at a quarter point. Oh, sign me up. Take it back down to the first leg, or take it back up to the first leg. All right. T-meow is trap move end of week. These are the the structures that Steve always talked about. That admittedly for years I just whatever false move. Yeah, that's in the perfect world. And it's like, well, yeah, that's what you're looking for. You're supposed to be looking for. You can't just look at a trend move I'll have to work on my Sally sold seashells by the seashores. My mouth is still all messed up. Are you saying I sound funny? Is that what you're saying? I just said I had dental work. People busting my chops. All right. So now let's go to the terminal. Yay! Okay. I can't laugh. It hurts. Somebody said to laugh. Okay, now this isn't the one that I want to start it on, but this is a good example of what I'm talking about. All right. Look at the beginning of this structure. Now this is the 4 hour. Each one of these segments is an entire week. All right, and look what happens as they start to move that water over the mayonnaise. What do we start to expect? We start to expect, oh, well, then we're going into level 2. We're above the 650 and whatnot, but it's not quite getting up into that oversold. But what do? They throw this big range, and they hit back into this range. All right? Do they extend? Yes, but you can see the 3 bursts, right? They come back next week. Does anybody see what structure or what segment of the weekly cycle this is? Someone's saying they can't see the charts. Is that everybody? All right, people are saying that they can see. Right, midweek reversal. So lining this up, this is the kind of thing that I look for. Now, granted, there might have been some reason to take it over here because that's, you can see the 3 bursts right here. You go down to H1, it's going to be a lot more clear. But we're just looking at the 4 hour just to get a sense of what I'm talking about. All right. This is presenting you with a range that says, hey, check me out. There's some Fibonacci thing in here that got retail traders excited, and look, it worked. It rejected out of there. This would have been there's something in here, if there was a clear enough pattern on the 15-minute, that it did reject out of here, okay, but they come back into this area and they work it again. And ironically enough, they are not going past this last, they trapped past it. Okay, my mouse is all jumpy. All right, they're smacking into this area. The last place people started going, oh, I think it's going to reject off of this 75 line. Okay, so they are inducing. They give you a nice week-wide, smaller, larger structure up there at the middle. So we have our W. What do we have? We get our middle. We get our M structure all the way back down. They almost always will go all the way back down. The pink box is the harmonic. Yes, sorry. I color my boxes pink. It kind of jumps out at you. Okay. So you're saying the harmonics will present another trade in the future in the same area, so keep them on the chart. Yes, it's 4 hours. Somebody's asking this is 4 hours. Yes. What I'm saying is that you should leave them on because they present a potential range for the market makers to work again, especially if they have rejected out of that area. If they've rejected, like right here, they have rejected out of this area, and then they come back up into this area. It's just a lot clearer that, like, okay, they already rejected out of there, now they're working it again, and you can kind of see the bursty action, the bursty move. All right. Now, I didn't want to start with this one, but that's what we're looking at right now. Yes, point to punter, M in the middle is not symmetrical with larger structure W. No, it's not always symmetrical at all. My drawing is a bit more symmetrical, but you can see right here they start to M, and this is why this might have presented as something like, aha, let me check that out, because this could be the second leg of this M. But ultimately, they retest the area one more time, and then you get your clear shift. I don't like that. Didn't close over the 13. Yes, I still obey some of those rules if I'm trading on the 4 hour. But again, I'm not really trading on the 4 hour. I'm marking out my areas. I'm projecting out. But you can see the 3 clear moves up. How I know it's going to come back up? Well, you don't, but once you see this, you can see the third push up, and you can see a little bing, ping, ping, third burst up, okay? But let's take a look at Eurodollar. That was... I don't want Euro GBP. I believe a lovely... Now let's take a look over here. This is the stuff that you want to look for, all right? Keep an eye out for this kind of stuff. Now we'll head down to 1 hour. Now obviously you can see the larger structure M, right? But do you see anything coming down into the middle of the structure? It's kind of choppy garbage behavior, and this is primarily why I like, well, yeah, the harmonic on the middle of the structure. I mean, this right here, this is a confluence of all confluences, okay, especially when we go down to the H1. All right, we're getting the 3 pushes down, and this is a great example that I wanted to show you because it's not very clear on the H4. All right. Because it's like, is this 1 burst, is this 2? I mean, to me it's clear, but it's much clearer on the H1, and that's where we're going to go to. But the middle comes down, the intersection of the mayonnaise crossing up over the quarter point is at the last place people got screwed going short. They're inducing past that 145, all right? That's a lovely sequence of events. But as we move down to the H1, I want to show you. Why? Oh, that's so ridiculous. There's another larger structure. Sorry, folks. This is probably why I should do screenshots instead. I am really lagging it up today. Okay. So remember what I said, the first leg of the larger structure typically starts with an intraday larger structure, okay? This is an intraday structure. You can see that. Anybody can see that. Like, oh, it's up, 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 many days of rise, okay? We get our final burst up, and they start working that tracer, okay? Intraday M formation, roll back down. We start to get our, okay, 13 cross the 50. Safety trade. But it's very, you need to learn to see this, though, because this is what they will do a lot of times in the larger structures. It is ugly. But we don't care. We're not, what I'm saying is I'm not trying to take like, oh, this, and I'm going to take all this down. If I catch this up here, sure. And on the 15-minute, it's a beautiful entry, okay? But I'm not concerned with all this. What I am concerned with when I get to the charts and I see this. Why? Because I recognize this as, okay, they're taking it, I mean, it's very choppy, bursty behavior. Again, there's that word. To induce down, but constantly hit the stops. They're constantly clearing the board. They're constantly working the board and getting people excited. Oh, it's going back up. No, it's going back down. I mean, look at all those pins and those railroad checks. It's everywhere. But if I get to the terminal and I see this, okay, this would, somebody said, this would be the trap move in a week. going in because this is a Friday. But if you were talking about this, the false move week beginning, yeah, if you really focus on it, I mean, you can see the false move week beginning right here, continuation. We get our midweek reversal, come back down into the start, not the start of the week, but where the false move week beginning occurred, and then just go into consolidation to end the week. And this actually, I didn't even realize it. This is one of the perfect examples where it kind of like closed right where it started. I know Steve has showed some of those before. Okay, but I see this as the W that's starting, and I can see the clear M formation of this larger W, which is the middle of this larger structure. You can see how they will work the previous areas. Okay, they'll stop just short. Okay, stop right here. Pin, and then roll over. They just break right past here, but they smack into that quarter point. Don't quite come up to this area and start to show, oh, is it going to go down now? I guess it's bouncing off that 47.50. All right, and then what do? They hit right into the top of this area. Anybody started going long, holding it, take them out, burst, start to roll over, okay? They hit into this trap volume area just enough to get people excited, burst, and then start to roll over, okay? Yes, exactly. Somebody's saying that's cool how conveniently it hits the blueberry on the second leg. I talked about this last week, the moving average tug, okay? I don't have the phone number of any market makers, but from doing the amount of homework that I have, I consistently see, you'll see these larger structures and the resets. They will do this choppy garbage and swing back and forth within a range, because the longer they do that, they will bring some of the larger moving averages into the range. Now, they get to break this area, break this 45, and clear the blueberry. Whereas if they made the move down here, you know, they have to break it an extra 20 pips or so, which is millions and billions of dollars. Okay, you want to see something cooler? And we're going to talk when I talk about scaling in and scaling out. All right. At all the places, let me move this over. Something is not right. Well, I'll have to leave it that color. Actually, no, that's going to drive me nuts. Spring green. There we go. Okay. Do this. Do this. And do this. Why is he doing that? Well, these are pins. And what do pins mean? Trap, right? TV, trap volume, right. Trap volume. This is where all the different people who thought it was going short got trapped. These are the most recent areas where trap, notice how they come right back down to there. They start jerking around there, roll back over, make a new one, close below the 50. That looks like a double top to people, roll back up, and they keep the trend going. Okay? They did it one last time on the mayonnaise, so now we have a bunch of trapped volume. On their way, they stop there. Come back up, hit these areas, pinned. Oh, it's going back up. No, just kidding. A false W. That a little bit more. And if they don't stop right at the bottom of that pin before they start jerking around again. Extend that out. Whoops. what do? They hit right to the top of it before jerking around again, okay? So you got people all over the trapped volume. That's what it is. So they're going to hit those areas, and keep this in mind, all right? Because when I start talking about the scaling in and scaling out, this is part of my strategy where I will say, for example, maybe this, I go short here, right? Okay. Start to take off positions, not just at like 50 pips or whatever. I look for the most likely areas for them to smack into. And then not reverse or anything, but basically to be jerks. And those areas are, you know, your previous day low, your previous day high, your larger moving averages, but also more importantly, your trapped volume. Do they go down? Sure, but I'll tell you what, I'd rather book 30% of my holdings at 125 pips and then move my stuff to break even. I can suffer through that if I've already booked profits. If I'm trying to hold everything, this is scaring me out, all right? Now, again, I'll look at this area. I'll go, well, you know, hey, that's an additional 50 pips. Why not? I'll scale some out there. How about over here, the top of that box? I always look at the pins, and I call these the volume bodies. If the pins are trapped volume, then the body that is attached to those pins I refer to as volume bodies. So you'll see on my charts a lot of times VB, which does not mean volatility bands. It means volume body because it's always up here, which is just my way of marking up that, oh, yes, what do you know, it smacked right into the volume body. Here it came down to the bottom of the pin. A lot of times it doesn't do that. A lot of times it will just stop dead at the volume body. And if you're not compensating for that and putting your take profit a couple pips in front of it, plus the spread, then, man, that's a depressing day when it comes down and it just misses you by 2 pips. But with this kind of strategy of looking to the left and really planning out your take profits, you're going to find you're going to be able to book a hell of a lot more. It's about the reset coming off of these larger structures. Where it will typically fail. It'll either fail back down at the middle or it will fail at the last previous consolidation level before the second leg. So if this was our second leg, we have 1, 2, 3, right? So this was the last area. What do? They come back down, pin, pin, pin. They're keeping off this area. That's starting to tell you, you know what? This probably isn't going to work out. And what do we do? Or what do they do? We get another continuation. Nonsense. All the way up, all the way up, all the way up. I'll get rid of that. This is one of my favorite kinds of larger structures where you get the W here. Now, I practice a lot by going bar by bar and do stuff on the hard red edge. And I always remember this one specifically because I got caught right here. I was like, yeah, you know, I'm going long, ooh, look, baseline bounce. And they were jerks. They took me out. Okay, now it's just practice, but man, you remember that stuff. So here we can see clearly 1, 2, 3, and this is where we get a beautiful 1350 cross, 5200 cross, larger structure in the middle, well, a mirror middle, smaller structure in the middle, but we get the W, and it just, now they need more money. They need more, okay? Then they head back up. Once they get out of there, okay, they broke this area, they start coming back in, you get that crossover, you know you're good, especially they go into this consolidation, they start ricocheting up. But these kinds of structures, if you can see them for what it is, the way this comes back up, there's no reason, if this is going to continue, there's no reason for this to come back up. This is a little bit trickier because they don't give you a second leg. This is like, you know, this is the third extended leg, but you have to get used to seeing this stuff. There's this particular, this structure in particular, where they hit it a third time and really extend and bring it back up. It actually happens a lot more than you think, but if you train yourself to see it, you'll have no fear about getting in on some of this stuff. What's way to the left of that peak low? You know, on my homework, it's funny. I think there was this general area. If you look, I'm really lagging now. This area broke right through here. Yeah. Yes. Anybody that started going long here, they're like, sorry, you're done. They start rolling over. Bam, bam, bam. Where do they stop? The last known area of consolidation. Isn't that, for your retail traders, triple top? Okay. And here's another perfect example why this can be beneficial. It's not like you would have missed, but bam, they hit into that area one more time a couple days later. If you have now removed that, it's just an additional confirmation. Yes, you could look at this and say, oh, I hit the blueberry one more time, but additional point of confirmation. So we'll finish this out. Okay, this is a week. This is just in like 2 days, and overall, I mean, you can almost see just the two bursts. But if you just look at this, you can see that first burst, second burst, third burst. All right, this is like a single leg middle, but you can still see that second leg kind of half a batish right there. And then what do we get? 3 bursts up, roll over, and if you can acknowledge this and see, like, you know what? Again, most peaks don't just roll over with this nonsense, this kind of nonsense. So once I see this rejection back up, I get confident in going, you know what, it's going back towards that first leg. All right. Now, I always recommend, of course, projecting outwards, so you can look at your trap volume. Where's the last place people got screwed? This pin. If I'm taking this back up, I want to be out by here. Do I miss like 20, 30 pips? Yeah, sure. Don't care. Okay. Intraday M's on top of those bursts. All these, yeah, because they're consistently showing down. It's just kind of ugly right here, but this especially, yeah, showing down. And, I want to take it all the way back up to the first leg. It gets ridiculous because how are you going to hold through all this? All right? Sometimes they don't always come all the way back up. Sometimes they come back up to this first level area. All right? So if I'm trying to hold it back up towards the top, I start to see this M formation. It rolls instead of here. But if I look at the trap volume and I say, all right, you know what? That's where the last place people got screwed was. Let me place my take profit there, plus 5 pips in front of it, plus spread. Cool. I'll get taken out. It's amazing how accurate you can get with that stuff. Okay. Excuse me. Okay. I'll take some questions now. I'm probably going to have to, I'm going to go more into I'll cover some additional stuff next week that I wanted to cover. It kind of got away from me. My head's not right tonight, so I apologize about that. But is there any questions for right now? In this instance, where's the, okay, this is, that's first leg. Okay, now this is one of those kind of instances where, say, people might get screwed up because, well, level 1, and then, well, where's my level 2? Where did it happen? Then they start measuring ADR, and they go, well, that's not 3 times ADR. What's happening? What's happening is they're just creating an M on the H1 or an M on the H4. That's it. Most of the times when something is crossing over, barely, the 50 is just crossing over the 200, or it's a near missing like that, and it's coming all the way back. What the hell? That's your larger structure. That's what's getting put in. That's why a lot of times I really don't like anything where the 13 hasn't crossed below the 50 and then back up across the 50 to give me a second leg. So the W in the middle, is that the blueberry? Yes, it's tight, it's small, but it's a variation on the theme. Okay? This was the second leg of a larger structure over there, and then they held right here for a week and a half before bursting up another level past the previous larger structure and gave us this second leg over here. What really gives it away is the clear burst, 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 1, 2, 3. God, I love that. ADR works great on trending, not as good on range bound. With the larger structure, I find the ADR times 3, it works great for the actual moves to know that you're going into level 3. But once level 3 starts, don't forget, the level 3 can become a reset, obviously. So when you're getting like a really decent reset, a lot of times that's where it doesn't work. You'll get like 1.5 times ADR. And yes, the range bound is where a lot of times that won't really work, because if you're ranging, you'll get the crossover because everything's getting tighter and you're getting the crosses, but the 3 times ADR, it's like, well, if you've been in a range for like a month of 250 pips, your ADR is going to be 250 pips. Well, not really, but you understand what I'm saying. It's a lot of times in the range bound you won't get that perfect 3 times ADR. Good to know whether you are in range bound, reset, or trending. Yes. The more you study, you'll start to see. Let me take you to a reset. This is a perfect example of what gets people screwed up. We get a larger reset right here. This is beautiful. This is fantastic. This is wonderful and awesome. Okay. As we start bursting down, we go, okay, we're 3 times ADR. Oh, 3 levels we're pushing down. We start to get our first over here. And we start to get what Carr called last week the dribble. Now, I never knew what to call it, but right around here, what do people start seeing? Right, longs. And I'm not just talking about the retail traders. Those of us in the BTMM family, or those of you in the BTMM family who haven't really taken the time to really study the H1. I will see all the time, like, oh, 13 crossed to 50, long, because, well, level 1, right? It can be, but this kind of garbage burst, pin, burst, and then pull away, the way it's making these bursts, and we're starting to get this slow crawl over. That just, from all the homework I've done, that just screams to me that's behavior of a reset. Okay. You can even see Head and Shoulders. We get that false move week beginning. They retest it a little bit, but it's just these slow moves or these bursty moves and then immediately taking it away. That's the kind of stuff that starts to scream reset. In case you don't know it's going to be a reset, but it also screams, this is what I always would designate as a 3x3, because I can see the moves in 3 bursts upwards into that middle, okay, and then the 3 moves back down. So this is the kind of stuff I like to take back down just to the first leg. It's a lot stronger. If I can see this sort of stuff, especially over here, wow, I'm really lagging. Little star pattern, second shoulder, just take it back down. Now this isn't particularly swing trading if it only lasts for that entire day, but look where it stops. Pretty much pins right to that volume body, where that volume is trapped right there, and then they jerk around. They pull way back and hit it? Sure. Do they go down further? Yes. But You don't know they're going to do that. And they even present you with a second leg at first before they look. I'll cover more of this next week. I know some of this was a bit shoddy and kind of splotchy and patchy. I'll resolve any questions you might have for next week. Please send them to the btmmswing@gmail.com. btmmswing@gmail.com. But here's what I want you to do. Review the tape. Let's take it to the tape. Review the tape and take flashcards of 10. Just find 10 larger structures, whether it's a true reversal larger structure or whether it turns into something like this. You need to be able to see that this isn't just a reset, but it had components of a larger structure. Why? Because this is where people, and they're just like, yeah, thanks for that. And they roll over. You have to be able to identify the peaks, the failed larger structures, to be able to look at this and see, like imagine that on the hard right edge and go, I see the second leg that people got excited about. Boom, boom, boom. You can you see the bursty behavior? Is anyone saying like, oh, that's silly, the way he's calling it, like bursty? That's the best way I can describe it. Okay, 13 crosses to 50, cool. Long? No, not really. Is this level 1? Well, we do get a stop hunt low, and it can come up. If you're taking 50, yeah, that's fine. But for a swing, start to notice how they handle the middle of that structure when they're just not getting out of there, and you're seeing this bursty, reckless behavior. Most likely, they're coming back down because this does not a great peak formation make. All right, that's why I said it instills some confidence to be able to take the middle. It's my favorite because once they start presenting you with certain kinds of behavior, you know they're going back down. They hit that area one more time, stay off of it. Now, what do? They brought the mayonnaise into there. They get to break that mayonnaise, not release this trap volume, and still keep going. It's a beautiful thing. So take cards, send them into btmmswing@gmail.com. Email any of your questions if some things weren't clear because of my out-of-itness, whatever you want to call it. And we'll move on from there. And it's not next week that I'm doing the next one. It's in 2 weeks or 3 weeks. I'll be doing my final one, and I'll cover everything there. Any questions, and specifically the take profits, scaling in, scaling out. That should be pretty quick because it's all kind of obvious stuff as far as I'm concerned. All right, everyone, have a good night. Appreciate it. Thank you very much for your patience, and I'll see you in Skype. Take care.